So, hello, and I welcome you to the Trading Spotlight today on Friday, the 6th of September 2019. This is Jens speaking, and it's my pleasure to be here today on a quite interesting topic, the traits of successful traders, part 1. So you can guess there will be a part 2 then next week. And yeah, so first of all, I just hope everyone can hear me well, but this seems to be the case. I can see it in the chat box. So if you have any question, please feel free to type it into the chat box. Then the question is, can you see the screen? But also this should be fine. Traits of successful traders is written there. And perfect. And then, yeah, let's take it from here. So again, it's a pleasure to be here today. Again with the Trading Spotlight series, and today's agenda, I've written it down here. It's about 5 aspects of successful traders, 5 character traits: patience, discipline, self-confidence, self-dependency, and humbleness. And these we want to go through and explain a little what I mean by that. So in fact, we won't focus today on the markets and have a look at today's NFP data. In fact, the data set itself was mixed, let's say. So it came in below expectation, which is kind of surprising, let's say, after several data over the week, which came in. Probably there was a tendency on Tuesday already with the ISM manufacturing, but this is nothing or not our business for today. So we want to exclusively focus on character traits. And as we already know, after several webinars here within the series, and please feel free to watch the recordings also in the YouTube channel here from Admiral Markets. Feel free, if you like what you see, to give a thumb up, and please feel free to ask your questions within the chat box, give feedback, ask, yeah, not only ask your questions, give feedback, but also write down if there's something you'd like to be a topic in the future. All what is related to this Trading Spotlight series, please feel free. And yeah, so within the series so far, we had also 2 webinars. I had the pleasure to have 2 webinars here on trading psychology. And we want to dig a little deeper then into some of these aspects here within the next 35, 40 minutes around. Since, or till these webinars took place, trading psychology related webinars, we know that trading has, where it's most of the time a mind's game, a game which plays within your brain. And here in this context, then these aspects are definitely important to be made a topic. So perfect. Now, so this is me. In fact, this time I haven't prepared the link to the interview I've given to Admiral Markets here before we started this Trading Spotlight series, so I can't post it here now in the chat box. But I will make sure that you have it below the video in the recording, which will be uploaded then there over the weekend, and where you can see the recording. So if you're right now watching the recording on YouTube, hi, leave a thumbs up here, please, if you like what you're seeing. And then there's also within the box here below the video a link to the interview. It's way better than go through every point here of my current career, even though it was, in fact, to some extent quite straightforward how I went into the financial industry and came into trading. One very important aspect, probably it's worth mentioning, that I'm located in Berlin, in Germany. And why is this important? Yeah, Admiral Markets is also located in Berlin, Germany, has an office here, one of many offices around the globe. So you can see here offices in 20+ countries. So a global expertise with local support in your native language. One of the main reasons why it's definitely important to have here a deeper look into the offering from Admiral Markets, because having a client support which speaks your language whatever problem you might have within your trading, especially when it comes to execution, whatever, is definitely something after more than 10 years in this industry here, which is very, very important and to some extent sometimes underrated. And so this is one of the many reasons why Admiral Markets is a very, very good choice. Also on top of that, Forex CFD broker with over 8,000 financial instruments, so a real multi-asset broker, highly competitive, especially when it comes to DAX trading, one of my main traded assets, in fact. And with super tight spread. So I'm in fact using the Admiral Prime offering with a 0.2 spread and commission on top, 60 cents per CFD, which means that I'm paying 0.8 per trade here, round term per CFD, or you can have it within the spread, so that you only have the spread of 0.8. But in general, as you can already hear from my words and my saying, it's definitely worth a look. Or giving Admiral Markets a deeper look. This is also true not only for the DAX and the CFD area, but also when it comes to FX trading, for example. So then let's start with something. Also here, the links to the books I'm currently referring to now, you will find these in the box below this video here in the recording. I referred to them already several times, and it's really how can I say that? It's no coincidence that I'm referring to these books over and over again. Market Wizards series from Jack Schwager. As far as I know, he's currently on another book on trading. Is currently looking for traders he can interview here. And the series started somewhere in the 80s, I think. The first book here, Market Wizards, was published then at the beginning of the 90s. There was then a second book that was in 1992, 1993, I think. And then in 2011, there was another book, for example, here, Hedge Fund Market Wizards, which I also highly recommend to read. And in fact, Market Wizards was one of the first books I ever read on trading. And it's one of the few books I read over and over and over again. So when I worked in the broker industry, I usually go to work with a bus, so or with the underground, not by car, and I have some time for me then, and I can read a book, for example. And this book here, Market Wizards, I had it with me, and also this one here in the new Market Wizards, the second part, and I had it several times with me. And some of my colleagues really started laughing at me and just asked over and over again. I mean, we worked together something like more than 5 years, and they just wondered, how can you read one book several times, and what do you get by this, or from it or out of it? And this was the interesting part of that, or is in general still the interesting part. I have the feeling that I take the book out of the in German the word is Regal. I don't know the word in English right now. From the shelf, the bookshelf, and then I read through it, and I have the feeling that every time I get something new out of it. And when you read the book over and over again, and it's an interview series with several traders, very successful traders. So they range from Paul Tudor Jones, George Soros. Oh no, I'm sorry, not George Soros, but Jim Rogers. Sorry. Bill Lipschutz, for example. You have Tom Baldwin, one of the biggest bond traders of all times. Tony Saliba, for example. These are the ones being quoted here. By the way, Bill Lipschutz, this is not true. Bill Lipschutz was in the second part. He was the former guy who built the AVIX options desk, I think. Was it options? But he was an FX trader. He's still an FX trader, so he's referred to the Sultan of currencies. And what you find out when reading through these interviews and reading them over and over again, there are several character traits every successful trader, every of these traders seems to have. This is something which then let me come to the conclusion it makes probably sense to write down several of these aspects and several of these character traits and study them and understand what and why they are the key reason why these guys then are successful in the trading. So this is in fact what I've now put here in some more words than here the text on the side. So the book series Market Wizards from Schwager consists of a series of interviews with some of the most successful traders of our time. After reading these books dozens of times, and I really mean dozens of times, I realized that successful traders have certain traits in common, and this week and next week, and this is then where the cycle closes here, the circle closes. I want to share my top 10 character traits for successful traders, and we want to start with the first 5 and go a little through the details then within the next minute. So 1 second, please. I have to, let me just see. Well, there we go. So let's start with the first character trait here. Successful trader character trait number 1. It's not really focus, but it's something we all know. It's discipline. And today is in fact a special day. So again, I haven't prepared any chart, but probably you were sitting in front of your screen, probably watch a recording right now. And it's Saturday, Sunday, and you were thinking about what happened last week, and you're probably also thinking about this a number which was just published around the non-farm payrolls, and which probably caused some kind of volatility. So we've seen there was some spiky action, but let's put it that way. I have seen non-farm payroll releases where the market just squeezed hundreds of points on the up and on the downside, and really showed us some significant action. So compared to this, today was really nothing to really be excited about, let's say. But let's assume that was one of the first days, and you've seen one of the currency pairs you were trading, or markets in general, like gold, dollar JPY, probably also equities, even though the volatility there was quite subdued. And now you wonder, okay, what just happened there? Before especially. So I was so excited about this number which was published, because many traders around, or traders, analysts, if you discuss in forums, social media and everything, you probably heard, okay, there's a big number to be published today, non-farm payrolls, especially after the latest data, and with the ACB next week, and Donald Trump, how will react, and all this. And you probably got really excited about this. And you probably, there was some kind of FOMO, we refer to this. It's something we call fear of missing out, so fear of missing a big move. And also the question, okay, I have a trading system, a strategy, I trade, I trust it. But the thing is, you somehow had second thoughts. You doubted that it will work well under today's market conditions, especially after hearing all this from other market participants. You probably have run a back test, and then you've seen that the strategy performed under several market conditions, different market conditions, really well in the past. And still, you couldn't hold your fingers back from your mouse and had to somehow click before and intervene in trades, take out the trade. For example, you were long, let's say in the DAX, you took out the trade, or you were short in the DAX or short Euro USD, you took out the trade for whatever reason, you just intervened. Or there was some in and out which didn't make sense, and which is not, this is not only related to the NFPs today, but probably also to other days in your trading. You probably had some in and out, and it was not based on your trading strategy, a proven profitable trading strategy. And what I right now do is I point out why this is one of the key differences between unsuccessful, unprofitable traders and successful, profitable traders. There's a psychologist in Germany who once was asked, you as a psychologist, trading psychologist, could you please tell me what's the difference, or what does a profitable trader, successful trader, does differently from an unsuccessful trader? And his answer was quite a funny one. He said, well, it's not much, but this small piece he does differently, he does it consistently. And he meant it. It was really, he was really serious about this. And think about it for a second. What does he mean by that? Well, what he was referring to is something we know under discipline. It's discipline. It's, in fact, the main difference between successful and unsuccessful traders. A disciplined trader focuses 100% on following his plan, knowing that he has an edge which he continuously capitalizes on. How can we refer, or put this here to today's situation around the non-farm payrolls? Well, he may have backtested the strategy for, let's say, 10 years. And let's take the, let's call it standard way. So you have an idea, you write it down, you probably code the strategy, and then you run the backtest. We say, okay, everything around data is not an issue here, so we have good data we can run the backtest with and all this. And now the interesting thing about this is there have been, let's say the backtest is a 10-year period or something. There have been, in fact, 12 months of the year, which means there was 120 NFP releases during this backtest period. And he has seen the performance of the strategy and the strategy in general performing really well under several different market conditions, on the long side, on the short side, and also when it comes to the non-farm payrolls. And he was not affected here, or the strategy, the backtest was not affected by second thoughts or doubts or emotions from the trader. But he just ran the strategy during during this certain period, and it performed well. So the backtest result was solid. It showed that it's a robust approach and you can trust it and go with it. So now the interesting thing about this is today's NFPs obviously didn't or will not affect the overall profitability of the strategy. And this is exactly the difference, the key difference here between successful traders and unsuccessful traders: discipline. So the successful trader is disciplined, focused on just trading the strategy, no matter what. There's a news release, fine. Sure, you have to make sure that you're trading with a broker, but this is all the work which you have put in here is work you do already before. You have to make sure that, for example, you have a broker which has solid liquidity, so that slippage is not a big issue. You have to make sure also that once you're trading an intraday strategy, for example, and you see that such a high volatile news event like the non-farm payrolls is published, that if you're trading, let's say, 5 points here around your stop loss level, that you have to make sure to take this into account to some extent. But still, even if you're facing slippage here and are probably caught on the wrong side of the trade, you still focus on trading the strategy. Just focus on trading the strategy, disciplined, and without intervening and without being a victim, let's say, of your emotions in some way. And the reason why a profitable, successful trader can be so disciplined and just follow his rules he predefined before is that he knows that a lack of discipline will cost him a lot of money in the long run. Thus, he consequently avoids it. So we referred to this the week before. Last week, on last Wednesday, we had the behavioral finance aspect. And there, we had cognitive biases and how these cognitive biases add up and result in a negative impact on the so-called expected value of your trading strategy. So this is the mathematical way to come nearer to this thought here. So he knows that if he does not focuses on trading his strategy and is not disciplined, that this negatively affects his trading in terms of his positive expected value he has, and it reduces the positive expected value, probably also turns the positive expected value into a negative one. And that makes it very easy for him to just follow his rules because he knows it will cost me a lot of money. And now the thing is, there will nevertheless be times when you miss a trade. Let's take me as an example for instance. So I usually run a system where I know that I have a so-called VPS, a virtual private server. It's a computer which runs all the time. And then I have an algo programmed giving the signals here on the trading. So which means nothing more than the entry signals are generated automatically by an algorithm over a VPS. So let's assume now the following. It's not a lack of discipline at my end, but it could be adapted if you're a discretionary trader and not trading with such an algorithm. But let's assume that there's some connection issue, some internet connection issue, or let's say there's an update on the VPS and it just shuts down, and your MetaTrader, for example, where you run this algorithm, is shut down. Let's take this as an example. And you just do not see it because you have an appointment or you're currently in a webinar. Let's say it now, right now. The thing is that this is then something you could have avoided. Probably the update was announced from the VPS provider or something. So it's still your fault as a trader. You have to make sure that you're aware of these updates, whatever. But the thing is, now the difference between the successful trader and the unsuccessful trader is the successful one will just say, okay, it was, let's call it the lack of discipline or internet connection issue, whatever, and I will just write it down in my trading journal, okay? I know about the issue, I formulate a strategy how to avoid it in the future, I address it, and then I just move on. I keep on trading. And I hope to some extent that I probably get lucky and that the trade I missed will be a losing trade and would have had a negative impact on my overall profitability, let's say. And this is how successful traders cope with that. Unsuccessful traders, unprofitable ones, do something different. They say, okay, I missed the trade, but I now have to somehow overcome this this fault as quick as possible, and then they just start to trade around somehow, somewhere, and find opportunities which are not really there and which are not going hand in hand with their overall trading strategy, which means nothing more than they add to the overall negative expectancy which they had due to their lack of discipline by adding with trades who are definitely not proven profitable. Probably they are, but most of the cases they aren't. And this is the one main big difference between successful and unsuccessful traders. So character trait number one, successful trader character trait number one is discipline. In fact, this goes somehow hand in hand with the character trait number two. By the way, let me just see here. Okay, perfect. I just saw that I didn't see the chat box here, but now everything's fine. Cool. Okay, successful character trait number two, patience. This is also true, and to some extent, it could also, again, take this non-farm payroll example. So what does patience mean? Well, it's obviously key to successful trading and goes hand in hand with discipline, because the successful trader we are talking about here has a clear, predefined entry and exit procedure, which he follows religiously and thus waits for patiently. This is also, you could also say, he's very disciplined here, due to his patience. So you can see that one follows out of the other here. And this is then obviously the reason why he's overall profitable in his trading, because knowing that following the signals he waits patiently for will, thanks to the positive expectancy, naturally result in a growing equity curve over time. What I mean by that is the following. Just imagine you have a trading strategy and you find out during a back test, let's say, that this strategy is, let me just do the following. Let me just try something. Let me just do it that way. So I will use here an example to probably show you a little better what I'm right now talking about. Let's assume the following. First of all, I write down here, it's the equity curve, okay? So equity curve. Let's probably enlarge this a little. Hello. There we go. So we have the equity curve. And let's assume the following. Now, you are backtesting a strategy and you start, let's say here, let's say in 2000 and, what is this? 2012, let's say. Okay, so this is the starting point of your backtest. And you end with your backtest, let's say here in June 18. Okay, so around 1 year, or not really. So so you backtest the strategy. I will do this in red now. So you backtest the strategy, and the strategy has a quite nice rising equity curve. Let's assume that this is the result of your overall backtest. Okay, you see that the strategy has been profitable. So it's a visual way to show, okay, obviously under several different market conditions, whatever amount of trades has been made and everything, but there was a positive equity curve. So obviously the strategy had within this time span here a positive expectancy. The more trades you look at here, the more likely it is in fact that the strategy is really profitable. But now the thing is, you can see here, there will be drawdowns within this, okay? So now you enter, and let's assume you start here with green, and you start there. And the market comes down, probably, or not the market, but the equity curve comes down. You start here right shortly after the market make new equity highs, and then there's the drawdown, and the drawdown probably takes something like 6 months or so. So this is now at the beginning of 2019. So now the problem is, what will you do? Will you patiently wait for things to turn around, or will you lose trust? Probably you have already lost trust and won't trade with the strategy anymore. This is what I refer to as patience in your trading and discipline. Keep on being disciplined, trade the strategy. You know, I mean, at the end, we are following a rule. Everyone knows in his trading, the trend is your friend. And we don't really know whether the business will continue to be profitable or not. But there's a high chance that it will be profitable, since we had a very solid backtest of over 6 years with plenty of trades. Let's say it's an intraday trading strategy, which is generating one signal minimum per day, which means you have 250 trading days per year, which means on 6 years, you are looking at here during this time span over 1,000 trades. I think this is already a solid number. And if you have seen over this time span here periods where the market came down, but at the end, and if you were capable of sitting out this drawdown, the market continue, or the strategy continued to perform well, then you only had to be patient and to be disciplined, right? And this is exactly what you have to do here. Be disciplined, keep on trading the signals, don't adapt or something. Adaptation, sure, in terms of you're in a drawdown, reduce position size, all this, but don't adapt in regards to how the systems are, the signals are generated. And just patiently keep on trading and wait till things turn around, and this will happen here naturally. Rather sooner than later, things will turn around and there will be new equity highs within the strategy. Hopefully, sure. I mean, no one can guarantee this, but this is as in business, right? And if it doesn't work, well, then you paid some money on this and you just move on. You say, okay, I probably do not correspond well with the strategy anymore. How do you feel this? Very simple. You, for example, realize that you do not feel comfortable. It affects your life. In what way? It doesn't really matter. But if you realize you do not correspond well with this trading strategy, move on. Switch to another strategy. Look for another strategy which most likely will affect your life in a positive way, respectively, which fulfills you in your trading. That's something we will look at in the next slide. But just to get an idea on what patience refers to here, or what I like to refer to here. Again, the last point, he knows that following the signals he waits patiently for, thanks to have a positive expectancy, naturally result in a growing equity curve over time. No one knows how long this will take, but over time, most likely the trend will continue. The strategy will pay money and you will make more money. And all it comes down to is discipline and be patient and wait for it. Okay. Successful trader character trait number 3. By the way, once again, back to the patience. You can also, but the reason I don't like this is because it's just not enough. Let's say, probably let's make things round here. When you're looking at the non-farm payrolls, for example, or how many times probably you have sit in front of your screen and thought about, now I enter the trade because I expect the breakout to happen. But usually the system says, I have to wait for the confirmation through the breakout and then trade. But instead of waiting, you were impatient and instead anticipated the break, which never happened and in fact generated a false signal then. This is also surely something which has to do with patience, but I think a little longer term, what I just presented with the equity curve and in regards to the positive expectancy you try to materialize over time, I think this is a little broader. It's more than only waiting for one trading signal. I mean, this is the small version of the big let's wait until the positive expectancy materializes. Okay, now we come to number 3, successful trader character trait number 3. Successful traders are self-confident. It's very interesting because this, in fact, goes hand in hand with something Tom Baldwin once said in this Market Wizard interview series. He said at one point in one interview, he said, successful traders do not have an ego. So ego trading is probably one of the worst character traits you can have, because it most likely results in revenge trading. So the market, yeah, you are stopped out, but it's nothing personal because the market really doesn't care about you. Believe me, it really doesn't care about you. But you take it personally, and then you start to think about, okay, I take revenge. We come back somehow. You can see that these character traits, they interact to some extent, and there's gray areas between them. They interact with each other. Let's here look at discipline in this regard. So, right, you want to take revenge, but still, successful traders, even though they have no ego, they are very self-confident. That means that successful traders know themselves really well, know their strengths, but also know their weaknesses in and out. And this is what self-confidence is about. I'm confident about myself, and this is what self-confidence means. And this is very interesting now, because I also like to go a little deeper here within that. I mean, if you know what your strengths and your weaknesses are, it becomes clear that, for example, let's say you have a very high loss aversion, and you have really deep trouble to let winning trades run, because all the time the market naturally in a trending phase, you will see a pullback within it, and every time the pullback happens, you probably go crazy. And if you know about this character trait, you can somehow try to overcome it, but still it will be within you, and you will still have this bad feeling once this pullback happens. Okay, and now the thing about this is that this probably means you have to then change your trading strategy, so that the trading strategy fits your character, not the other way around, because this is usually not a very good way to cope with such problems here. But I'd like to go a little deeper here, because what I found out, for example, over time, for me or for myself, was if I know myself in and out, and I reflect very strongly. So I really try to find out why I behave in certain spots, how I behave. This is not only true in regards to my trading, but it's also true in regards to other aspects of my life. Why am I the way I am? And so when I studied myself here over time, and still do, by the way, it leaves successful traders with a strategy which perfectly suits their personality and is to some extent also an image of their values and beliefs. So what do I mean by that? Well, I'm someone who believes that there is over time, and not only over time, but over and over again in life, there is strong resistance or strong support, to put it in a trading perspective. And it really takes time, and it takes lots of effort to overcome these resistance lines in this case. So, but if you succeed in overcoming these and break through these resistance zones, then you start to gain momentum. And this is something I found out for myself in several or under several circumstances, yeah, in several life circumstances, that I had to fight quite strongly to overcome resistance zone. But after I went through this, I really took on momentum, and no one could stop me. I was just like I was just moving, and I was in a flow, and it also gave me greater self-confidence and resulted in my best character traits being presented to my outer world, let's say. So what has this to do with my trading? It's very simple, in fact. I'm a breakout trader who tries to, by trading the breakout, then anticipate a stronger trend. developing out of this. It perfectly fits my personal style. It makes sense. It just makes sense to me. It feels normal. The only problem is, and this is something which I have to cope with several times, if the market fakes out on the upside. So usually I am someone who sees a breakthrough happening and then taking on momentum, but we have seen plenty of times, and also you as the viewer here of this video right now, you will have seen fake breakouts. The market broke out through a strong resistance on the upside or broke out on the downside, and took on bearish momentum, and then reversed sharply higher due to whatever news happened, or a fake out, stops being taken out only, and then the market reversed. This is sometimes something I have really trouble with understanding and also accepting, even though over time you start to get used to it. You know, okay, probably you just got lucky in your life, and this is something you faced several times, that you went through a problem and then took on momentum, and it was like was a no-brainer then, and you had not really to think about it, but just keep holding the current momentum and get forward in your life. And probably you just got lucky. And in trading, there's more than just 1 or 2 or 3 circumstances than in your life, but plenty of those over trading week, let's say. But in general, again, let's come back to the values, the beliefs you have. It's very, very good to know you, because it makes it possible for you to formulate a strategy which really fits your personality. It's abstract. It's not easy. I'm not saying that. But if you succeed in formulating a trading strategy which really mirrors your core beliefs and your core values, then you can have lots of fun with your trading, in fact, because it's not really difficult then to trade, but it's like you have the feeling, this is me, and that's why it just works. You're in your zone, we call this, in fact. And knowing that successful traders are not giving unquestioned advices, for example, in regards to other traders and their strategies, but embrace their ideas to improve their approach. Also, plenty of times you might have had conversations with other traders, also forums, on social media, Facebook, Twitter, wherever, and then you formulate your strategy because you just felt good about it, and then someone came and told you, oh, well, this is not going to work. No, because of this, and this reason. And this is usually something which does not really happen if you're talking to a real successful trader. Sure, sometimes there is there is definitely some work to be done to make the idea profitable, even though you might feel good for it or good about it already. But usually you ask for advice then. I would never, ever, if someone presents his idea to me, I wait for him to ask me, okay, what do you think about this? And then I give my advice and I say, yes, I really like the idea. And probably I had already the pleasure to get to know him a little better and really see that this trading strategy fits his personality or doesn't. Also something where I say, hey, am I probably right that you're, let's say, comfortable in ranges or something? Now think about someone probably feel comfortable and not willing to break out of his comfort zone. If this guy is now going for a trend following strategy, I have some doubt that this will really work, because he will most likely probably cut his winning trades short and not really let losing trades run, but the fact that he's cutting winning trades short will probably already affect here his overall trend following strategy in a negative way. So this is then how I try to give an advice and really try to understand the needs also from the guy wondering about his trading, and if this or that makes sense. And I really after all the years and all the experience I gained over years, I am not someone who's giving such advices without being asked, because this is something I really don't think is positive for both sides. And this is something which really happens a lot when talking to successful traders. It's I had the pleasure to work with a very, very successful trader of the 1980s, 1990s, a guy from Germany who was also an official institutional trader and really trading billions of yeah, back then Deutschmark and also US dollar. And it was you felt so great in his being in his room and talk to him. He was so warm and he listened to you, and he never came out with like, I want to give you an advice here, but you asked for advice in to this trader. And this is something which I found out over time that successful traders obviously have in common, and it happened several times. So it's not only this guy, but someone which stayed in my mind here, and this is something which results most of the time out of this self-confidence. Then knowing yourself, but also knowing that this might not work for others, but something else might work for them, even though it might not work for you. And this is resulting out of self-confidence. So let's have a look here at the successful trader character trait number 4. Successful traders are self-dependent. What does self-dependency mean? It means, in this case here, that they are 100% responsible for their winning trades and their losing trades. And in fact, they don't complain. Okay, not in front of others. Believe me, I want to be straight and want to be honest with you. There have been times when I just sit here in front of my screen, I just shake the head and just think, really? Really, is this necessary? So last week, for example, and the DAX, you probably have seen the price action several times. It was just sharp, pushed lower, and then the market just pushed higher again, probably drifted even higher than that. Why is that noteworthy? Well, the uptrend, everyone can see it right now in the DAX, which developed here over the last weeks. I had several long positions. I was quite sure that over time, the DAX will probably make it back above 12,000. This, in fact, happened. Unfortunately, I didn't make the money I hoped to make on this move above 12,000 points due to these spikes on the downside. For whatever reason, there was then someone from the ECB saying, well, do we really need to deliver QE next week on Thursday? Oh, we do not find an appointment for our Chinese-US trade talks, all this. But at the end of the day, if someone comes to me or I discuss with traders, let's say in a forum or whatever, I don't complain. I complain to myself, yes, and I more and more wonder if I probably should now take this step to not complain to myself anymore, because at the end of the day, no one listens, especially not me, because I listen to myself, but I know that no one's listening to me, not the market, not everyone, but it's just my problem. And so the thing is, at the end of the day, just accept that the markets, don't take it personally. It's just part of the game. And as markets take away money from you, or you leave money on the table, let's put it that way, at the end, you probably make some money in the other way. And this is something you also do not complain about, or you're not bragging about and really like, I'm the greatest trader in the world, because it's not true. It's really, be in your zone, accept that the market gives something to you, be happy about it, thankful, and then move on. This is, by the way, the next point we will look at here, the last character trait for today, number 5 then. But let's come back here to the self-dependency. While they wait, successful traders wait patiently for the moments, signals. They also create them by actively influencing what they can. So I'm not someone who thinks he can move markets, but I'm someone who can, who deeply believes that I can move myself, which means I can make sure that I, for example, place a stop loss, make sure that I cut my losing trades short. This is what I can impact. I can't impact whether some ECB member or US president tweets something, or whatever news is delivered. I can't influence this. It will move the market in one or the other direction. But what I can do is I can make sure that if I'm caught on the wrong side of the trade, especially, I can cut my losing trade short. This is one thing I can affect. On the other hand, I know what I'm looking for, and if my edge materializes, then I can make sure, for example, a trend develops in my case, then I can make sure that I get the most out of this by trailing the stop accordingly. let's say via super trend indicator, whatever works for my strategy in this case. Yeah, and then let's move to character trait number 5. Successful traders are humble. As I already said, it is still a pleasure to talk to highly successful traders because they're really humble. And from time to time, you can also tell whether someone is a successful trader or not. Sure, there are those ego guys, let's say from the 1980s, who let's say wore suits like Gordon Gekko and came with a cigar and played like they are really the greatest players, traders on earth. But usually, and based on my personal experience, this is far from the truth. Successful traders are really humble guys. They are really down to earth, and they accept what the market gives to them. They are thankful about this. They don't personalize losses. So if the market takes something away from them and they leave money on the table, they fully accept it as part of the trading business. And again, they thank for the opportunity the market delivers. They thank for the positive outcome, and then they just move on. They say, thank you, that was a good day. I woke up on the right side of variance. Let's go, move on to the next trade, and influence what I can influence. I can influence what I especially lose at the end of the day. And if I take care of that, winning trades will take care of it. Winning trades will take care of them themselves. So let's look here at the summary. So successful traders are disciplined. Character trait number 1. Successful traders are patient. Character trait number 2. Successful traders are self-confident and trade a strategy which suits their character and personality. Character trait number 3. Number 4 is successful traders are self-dependent. And number 5 is successful traders are humble. And so that's it, in fact, for today. Don't forget to join us next time. Next week on Friday, we have the successful traders character traits number 6 to 10. But before that, on Monday, Paul Wallace will be here and within our trading spotlight series here, and show you in this case how to use currency correlations and forex trading. And this includes then in this case, what are currency correlations? Why are different currencies correlated? How to use currency correlations in your trading? And here's the time when, oh, by the way, this is probably not right. We have to add another time here. So it's 1 p.m. I'm sorry. It's 1 p.m. GMT. But the good thing about this is you get the webinar link to your inbox. So if not, and you watch this on YouTube, check the box here below. And there you can register. And again, so you have to take here the 2 away. It's 1 p.m. GMT on Monday then, September 9th. For more analysis and education, go to admiralmarkets.com. And these are the contact details from Admiral. So I hope you enjoyed the webinar, and I wish you all the best. Have a nice weekend ahead. Enjoy yourself. Take care, happy trading, watch your stops, and see you next week with the successful traders or character traits of successful traders. Then from 6 to 10, and yeah, this is from my end. So all the best, take care, see you, and bye-bye.